Sunday, April 2nd. I like to go over this post-market, the previous week analysis, classic buy template, right? So I'm gonna just dive right into it. Basically, last week we had a classic buy template, right? Um, some classic SMT, and I'll kind of show you what that looks like in hindsight with a drawing. All right, so boom, that would be Monday, Tuesday, sometimes Tuesday can also take the high, but Tuesday always sets the low, right? So boom. Basically, this is Monday or Sunday open, rather, right? So Monday comes and creates a false high. We come and take out Monday's low, and Tuesday creates the low of the week, and then boom, we come and take Monday's high. And most of the time, when that occurs, it is a previous week close or a previous week low that gets taken, and then we'll go for that previous week high and previous week open, right? So with that being said, I'll get right into it. Let's see. So off the 4 hour, we've been edging towards premium on the IPTA ranges for quite some time. This is 20, this is 40, and this is 60. So 20 and 40 were pretty much equal, and we've been in premium for, quite a long time. Since I would say we've been in premium and respected premium since FOMC, right? But I'll get into that in a couple of minutes. But I also wanted to go over, kind of something that I saw last week. So we had a double order block in the previous weeks in this accumulation phase, right? So we had this accumulation phase, and these double order blocks, they did respect, right? Last down candle before the up move, broke the last down candle, right? Broke the top, came back down to rebalance, and boom, that first candle had a sharper reaction than the first order block. So we broke that last down candle's high, boom. So basically that is something that I was eyeing for a while. And I'll just scrub this over. Once it gets rebalanced, you don't necessarily have to look for the wick, or even you don't have to look for the wick, but it can come into consequent encroachment of that wick, especially on whatever time frame we're on. So let's see. Boom. Damn, I don't got my fucking OTE on here. Oh, there it is. So also, I did notice that within this IPTA range, we had two swing points that were key to me. This was FOMC from the previous week, not this last week, but the week before that. So that was the 22nd. So I took that swing point and took the swing point where we broke structure right here. And as you notice, we came and we traded aggressively away from these OTE levels. Anticipating a retracement, you can really you can really bank on, this 618 and 50 level. I would have loved to see this get traded into. I think we will eventually. Um, and you can also, since this got respected, can also pull it to right here, right? So since this was an order block and we created an order block within the OTE, um, it's good to see that, because how we broke all these levels, we broke, and then came retested, came back, and then we came and retested this OTE, right? So with that being said, um, that was that double order block right here. I'll make that purple because I like my order blocks purple, right? So order block within the OTE, and then we also had this new week opening gap that got traded into, right? So that's multiple confluences right here. We got an order block, OTE, and a new week opening gap, and that is very key. So we accumulated, manipulated, and redistributed. So I will be going over that in a few minutes, but I also want to go over, let's see. So basically, you know, on this economic calendar, right? I use Forex Factory. Let's see. We'll start from the 19th. Right. So the 19th, had that Fed announcement. I really only look at high impact and orange folders. I also look at CAD, Euro, and USD. Um, because obviously we're in London Killzones, you can expect some volatility um, if you're trading London. So with that being said, Wednesday the 22nd, we had that FOMC economic projections and that federal funds rate, right? So the interest rates got raised, and that's what signaled this initial drop right here, right? You know, people probably thought we were gonna go way lower. I myself kind of thought we would too, but it wasn't a big enough rate hike for us to go lower than that. So last week, right? Last week we had this red folder on Tuesday. We didn't have anything Monday. So in a bullish market or in a trending market, right? We can anticipate that the low will get set 75% of the time on a Tuesday, or the high will get set on a Tuesday. Now, if we hold that Sunday price, below it or above it, you can anticipate us to edge higher or lower due to market structure. And also, Sunday is a very key price, very key to understand. And we can also set, if we aggressively run on Monday, if we aggressively run higher on Monday, that can signal that we have set the high of the week. Or if we aggressively run lower, that can signal that we're setting the low of the week. And it has to be super aggressive, and there has to be a higher time frame PD array, that is signaling to us, like a daily FVG, a weekly previous week high, previous week close, or previous week open, right? So with those are my key, or a double order block or a daily order block, so if we run into something like that on a Monday, that can anticipate you can anticipate that we are edging to set the high or the low of the week on Monday, right? But 75% of the time, we set the low or high of the week on Tuesday or Wednesday. Um, you know, my favorite model is on Tuesday. Personally, I feel like that is the most profitable for me. That's something that I have personally back tested a lot. So all week we had red folder news, right? And something that I always pay attention to, I know the mentor doesn't say to pay attention to numbers, but I always like to read this. Usual effect, actual greater than forecast is good for currency. That's all I read. I don't give a shit any about this. But when the numbers come in, actual greater would be good for currency. Well, we came in negative. We came in below, right? So that could signal that dollar was going to be weak and indices were going to edge higher. So, with that, we also had red folder news on Friday as well, which also ran us into this volume imbalance right here. Right, so this is a volume imbalance. Right, I don't know where that went. Let's see. Okay, I guess it didn't. One sec. Whatever. This is a volume imbalance right here. Oh, there it is. Right. So that was a daily volume imbalance that I've been eyeing for a minute. Basically a gap in price. And on Friday, instead of rejecting it, like I didn't think it would reject it, we broke through the bottom, retested the bottom, and then edged higher, right? And off the top, we created support off the top. So I am thinking that we will gap higher today via Monday market open. And that, that's something that I personally think will happen. And yeah, I honestly see that happening. So 6 p.m. market open, 6 p.m. EST, right? So we had multiple confluences right here, right? And on this Monday price, we aggressively ran lower. But what is this right here? We're building liquidity, right? Building liquidity, building liquidity, So this was actually a nice London play, or 6:30 play. Sorry, read that wrong. But this was a nice London Killzone play for Monday. Um, we opened up Sunday, created equal highs, a nice Judas, right? Came down, busted through the lows. Um, but we also had all this liquidity down here from that Tuesday FOMC meeting, which can signal that we're going to get a market maker buy model, especially with all this trend. I mean, all these stops, these are all stop losses. Understand that a lot of people were invested into this area right here. There was a lot of, retail sentiment, if you're trading trend lines, that's a nice trend line, right? Until it gets broken through and then your stock gets cracked and people are buying this as support, right? And we actually came and rebalanced into this double order block. So classic retail trend line, right? Building retail liquidity, and all these stops started getting shot out. That's why we aggressively started edging lower. And there's massive greed in the market, and also fear with the banks, aka collapsing. I don't really think it's a bank collapse yet. I just think that's a catalyst for what the Federal Reserve has created, um, which I won't get into all that because that's a different topic. But so this retail trend line, I'll make it black, right? This is retail liquidity, and this is liquidity that people are engaging on a retail logic. And they definitely made some money, but I guarantee they didn't pull out a significant amount. So with that, that can give you a good idea that we're going to have a market maker buy model, especially how we accumulated so much liquidity right here. And then this right here is basically SMT divergence with US 30. I personally trade NAS or NQ. I've always traded it. I also do trade SPX or ES, but I am more so focused on NASDAQ because that's what I've always traded, even when I started out. I've been trading for about 3.5 years. I'm studying ICT concepts for about 2.5, but I started taking it seriously at 2 years. So we had this SMT divergence, right? And what I said about that Monday, we aggressively pushed into that low, and we aggressively pushed into recent market structure. And, this SMT, we did not break that Monday low. We did not take out that Monday low. So Tuesday came and respected that Monday low. So this would be SMT with NQ. Right, SMT with NQ. Now, if you miss this play, how would one engage if you quote unquote miss this play? Well, you can come and you can look for Asia session, right? These are some indicators that I personally look at. I'm not going to go over them today. But this marks out London and marks out New York, right? So in these kill zones, you can look for. I mean, this was a real nice unicorn, or not a unicorn, but it's a unicorn for me. It's like my unicorn Judas model, right? London consolidation, take out that London low, pre-market open, right? And I'll get right into that. I'll go through that. But the blue represents the London, and the black represents New York. So, it was kind of a difficult week, but since we started we just kept going and going and going. So, the model that I would have personally engaged in was the Judas and the 930-2022 model, right? So we had this tight range consolidation, and normally when you have a tight range consolidation through London, stops usually get tagged on both sides, boom, boom, right? And we also had these equal highs via London, right? Equal highs via London, or Asia, sorry. This is Asia session right here, this dotted box with the consequent encroachment. So we had equal highs in Asia session, right? Tight range through London at the low, aka discount of Asia, right? And we also had this new day opening gap. an N dog, right? Mark that. So I guess you could pull it to right there. So that's an N dog, new day opening gap, right? And all boxed in, multiple confluences in one area. That's something that I like to see for a lead pipe trade. You know, and I'm very aggressive. I did catch this entry down here, but I was very busy this week and ended up closing out. And regret it, but I actually did catch this 632. And if you look on the 4 hour, right, something that I missed going over. Let's see. Something that I missed going over, right? Last week, we created liquidity from Wednesday to Friday, right? Smooth edges, got to get turned jagged, right? As ICT would say. So with that, you know, we took out all these. Let's see, let me take this out. We took out all these equal lows right here and tapped into this NWOG, sorry, new week opening gap. So we took out this low, and smooth edges tend to always get turned jagged, as ICT would say, right? So this is a catalyst for a market maker buy model. This is usually what I look for in terms of long price runs, and it was the end of Q1, so you can kind of anticipate that the monthly expansion is going to happen in that week, or a weekly expansion is going to happen in that week, right? So yeah, basically, you know, we came and respected this OB, right? And this multiple confluences in this area. Tuesday set the low, right? Tuesday set the low. So we're already in the buy program, you know, and something I've been noticing is that the PM macros have been hitting a lot harder than the AM, and we've been consolidating through AM session due to the fact that London session has the wider or longer expansion, right? And then come London close, you know, at 12 o'clock, you know, that's when we tend to get that expansion higher through the AM, or in New York. So in New York, if we have a big expansion, or 75% of the average daily range, you know, and how do you find the daily range? Well, you take the last 5 days and you get the median of that. So if we create, say the daily range, or the average daily range is 125 handles, right? Well, if London takes up 3/4 of that and moves 75 handles, then we can anticipate that we get consolidation through New York AM session, which would be 9:30 to 12 or 1, sorry. And then, you know, London lunch is 5 a.m. to 7 a.m. And, you know, you can anticipate some kind of move, and those are kill zones, right? So yeah, basically 2 a.m. to 5 a.m. or 1 a.m. to 5 a.m. is London kill zone, right? And then there's 5 a.m. to 7 a.m. EST is London lunch, which is just like New York lunch, which would be 12 to 1, obviously. And these are all kill zones. So London close is London close kill zone is 10 a.m. to 12 p.m. Right? So that is New York session, and London close reversal. That can you can anticipate some kind of action and price action to happen in that area. So sticking to the kill zones is very key. That's something that I have been, lacking, is paying attention to my kill zones. And that PM session is very, very, very key, especially if we have a large range in London or a big move. So market structure, we came and took these highs, didn't really have any sort of retracement, right? And we took out all these lows, and you know, uh, E-mini Dow Jones failed, US 30 failed to take those lows. Weakness. So you always try to spot the weakness, right? And also cracking correlation was this area in dollar. I was looking for. It's kind of crazy how my 15-minute FVG played out from previous week. And yeah, so you can anticipate when we edge lower on dollar to have higher indices, and it started correlating together towards the end of the week. That's pretty normal, you know, um, because you want to see that algorithmic price happen from Tuesday, right? So Tuesday, dollar, dollar didn't set the high. But Wednesday, we had a massive breakout and we set that high on dollar, and then boom, we started dropping and indices started pumping higher, right? So, how would you engage if you missed this aggressive entry? And how would you catch this aggressive entry, right? How would you anticipate this aggressive entry? Well, you can anticipate it by multiple confluences. We did have a 6-hour FVG within this order block, this double order block that I've been outlining, and we took out that Tuesday price on that 6-hour candle, which is something that I like to see. But if you're getting in at a 6-hour low, you want to make sure that you're getting in on a bearish candle. Especially with a confluence like this, double order block, new week opening gap, FVG, that's a very, very key. And then the SMT, that's a very key. That's multiple confluences in one area, which can lead to a lead pipe trade or a weekly expansion, right? So with that, how would you engage in that? Well, we had a turtle soup down here, market maker buy model, right? So let's see, where did that go? Tripping. So we took out that low, right? Took out that low, and again, PM session trade, right? So you have 3 down close candles off of a higher time frame low, and then you have equal highs up here, relative equal highs right here, trend line liquidity right here, and we also got a SIBI above that you can target, right? So once we close out this is a balanced price range, right? 930 price. So we took that low, SMT divergence, right? But how would you engage? How would one engage? So you take these 3 down close candles on a lower time frame after taking a higher time frame liquidity PD array, right, into a double order block, 6-hour FVG, right? So you want to find an imbalance. You want to find an FVG, right? Consequent encroachment of this candle Consequent encroachment, boom, respected, right? But lower time frame can go even lower, and it'll be even more defined, right? So 3 down closed candles representing an order block, boom, we took out that high, and then boom, we came and rebalanced into this area, rebalanced this FVG, created a mini breaker right here, broke structure again, have a SIBI right here. So you could have your terminus looking at this right here, or this equal high, because there's multiple SIBIs that you could look for that got created via London. So I'm dropping some sauce for y'all. Pay attention. This is a fractal right here. Price started to get fractal, right? Boom. And we're fractal on every single time frame. So you can anticipate on a lower time frame that we get that FVG. And look, you won't be able to see it on a higher time frame. But you know that this low got taken and we're trading into this NWOG, double order block, and you know, SMT divergence, multiple confluences. So it's really that simple. I take very aggressive entries, and most of the time I get 0 drawdown. I like to see an instant reaction. You know, I necessarily don't like to take 20 points to 30 point drawdown. If I do, I caught a bad entry and I know that. So that's just how I personally trade, right? So then how would you engage on a lower time frame? Well, if you're trading London, you can also find entries, but it was kind of a hard London session last week. You know, consolidation, boom, right? But just spot FVGs, you know, time and price. Wait for the FVGs to get filled at a certain time, right? We created trendline liquidity right here. And what did I say? London close kill zone is 12. London close kill zone is from 10 a.m. to 12 p.m., right? So spot the FVG. We broke structure right here, right? That's a valid FVG. We broke structure. Broke structure right here. And boom. You can basically just engage like that. You know, wait, if we get a consolidated AM session, well, you can anticipate the PM session to give you a price run that you want. Now, this is a low resistance liquidity run, so I would not personally engage in that. So on to the next, right? London, consolidated London, you know, have an order block right here. Make it purple. Have an order block right here. Broke the last down close candle before the up move. And now we took double of that. That was a low resistance liquidity run, right? But 830 price, 820, that's also a kill zone. So that kill zone came and hit into that order block. And let's see what Asia session did. So that was a large Asia session. So you can anticipate what? A consolidated London, right? Where's London? London start, boom, right? So once you start to break it down and chop it down like this, it makes a lot more sense. Look, equal highs up here, consolidated London, right? Equal highs. 830 price came and respected this order block. Where would your stop go? Well, right below this down close candle. If we break this, I don't want to see. I don't want to be involved in this no more. But something that you can notice, we kept breaking structure. Even in a consolidated range, we kept breaking highs, breaking highs, breaking highs. But this was a low resistance. This wasn't even really liquidity run. It was just low resistance due to a large Asian range. Boom. So order block, we could have engaged into that, and then you get a high, or sorry, this is a high resistance. This was low resistance. And then we have a low resistance right here, right? So you could have basically caught off of this order block. Let's be real, we would have probably caught it from right there. I mean, that's 75 handles in, I mean, about 30 minutes, 40 minutes. I mean, who wouldn't want that? And then boom, we come, retest. Where's the London kill zone? Or London close kill zone, sorry. 10 a.m. to 12 a.m. That's a macro, right? Equal highs. Smooth edges got to get turned jagged, so your terminus could have been right there. But it was a high resistance liquidity run, so I wouldn't have wanted to engage in that. Right? Now we come into, let's see, yeah, New York, boom, PM session, right? We have equal highs up here, and we crack this high, break the structure. But what is this? Well, this is a 3-minute order block. Last down close candle, taken by the high, doubled up, and we got to come rebalance. Now, this was another high resistance liquidity run. Wouldn't want to engage in that. So, you know, once you start to chop it down like that, it makes more sense, right? It makes a lot more sense. And then this is something that I personally would have banked on. You know, large, what? Asia session, right? Large Asia session. Consolidated London, right? Consolidated London. Equal lows, multiple equal lows, even through London, or Asia session and London. So that's just even more liquidity for a nice run, right? Came and smacked their stops, right? All these stop losses that they thought would have held for the buy and the sell got stopped out, right? Okay, well, what do I look for right here? Well, look at this candle. You can see it better on a 15-minute, and I'll switch over to that in just a second, but this is a fair value gap, right? And then we have a new week or a new day opening gap, multiple confluences, Asia session lows rated, London session lows rated, right? Stops hit, boom, stops hit, and we have equal highs at this Asia session. Perfect. Okay, how do we engage though? Well, drop down to 5-minute. I like that 5-minute a lot better, a lot more defined. But I think 15 minutes a lot better just due to how we chopped. And this is also this is just a nice stop hunt, right? Stopped out this side, stopped out that side, all in one candle. Perfect. That's what we love to see. And then what? 2022 model refined up to the 15-minute, right? Smooth edges got to get turned jagged. Got an area of imbalance. Basically, this FVG after this stop hunt. Let's see. Hold 1 second. Doing too much. So we got this stop hunt, draw of liquidity, right? Where would our next draw of liquidity if sell side gets taken? This is sell side liquidity. where's our next area? If we're looking for sell side to get taken, where's the next area? Buy side. Where's the buy side created? Asia session, London session, right? So 15-minute FVG. Let's drop down to 1 minute. Really scale into it. Amazing price run. You can tell this is very anemic. Very anemic. And once we closed out, boom, smacked into that imbalance perfectly. Now, if you miss this entry, where else would you get into? Well, like ICT says, sometimes every single candle can be a buying opportunity within a kill zone. So 930, 932, that would have been a safer entry. Why? Well, we broke this candle's high, and we have buy side up here after sell side was already taken, and we didn't really take any buy side through here. I mean, if you'd consider that buy side, I mean, I guess you could, but for me personally, this was more distinct. This Asia session range was more distinct. Look, right at the top. So that's something that I always look for. This is a nasty Judas, right? Taking sell stops on both sides and buy stops. Sell side got engaged first, which was that London low, right? So that London low, and then boom, you know, turned into a high resistance liquidity run. But if you were on a higher time frame, you would have definitely held that because of how aggressively we traded into. So something that I like to see is that 1 minute break of structure, and then I chop up to higher time frames. 5 minute, where's the next 5 minute break of structure? Where's the next 15-minute break of structure? Right? And then engage to this buy side. Boom, you could have had most of your terminus right here. So, you know, that's pretty much it for me. I feel like I have went over that pretty nicely. This volume imbalance, we broke through it, created support at the bottom, and aggressively traded higher. You know, we had higher time frame PD arrays, right? Higher time frame PD arrays, this daily imbalance, very, very close. So Thursday usually caps off the range for the week. But if we have higher time frame PD arrays on the daily time frame, you can anticipate an aggressive run into that via Friday. Friday is either a small range consolidation, or if there's higher time frame PD arrays, we can run to that aggressively. Hope this was informative. Please let me know some comments in the comment section, and like and subscribe to this video. Coming into next week, right? I would love to see us reaccumulate lower, right? I want to see this. This is an order block to me, even though it's not 3 candles. Technically it is, but it's not 3 down close. But I want to see this order block get traded back into, or let me just delete all this. So what would I look for? Well, I want to see this 12.917 NQ E-mini contract get traded into, or consequent encroachment of this wick, which we did not have a candle body close into this area. So we could anticipate this, smooth